The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate your growling and prowling with us out here. We have the Dow Industrials down 45, Nasdaq off 8, S&P's off 3. Gold contract down $8, trading at $15.52 an ounce. You get silver. Silver's getting whacked out here, down 37 cents, $17.70 an ounce. Light sweet crude. How much light sweet crude?
Volatility, man.
Moving around.
Yes.
Only down 23 right now, but man, you're at $60. You're at 58.30. Notes and bonds, they just continue higher price, lower yield. You get the 10-year up 13 ticks right now, 129.14. 30-year up a full point at 158.09. And King dollar down 100 ticks, trading 97.506. The euro's at 111, the yen is at 110, and the pound is at 130 to 1 U.S. dollar. You kicked off your first show this morning.
Morning market
Congratulations.
kickoff. Thanks. 8:30 a.m. every day. Check it out. I encourage everybody. We'll see what's going on for the market.
And, you know, you got plenty to talk about, man.
We sure do, man. We sure do.
Futures might have been down, but guess what? They don't want to stay down.
No.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, if you want to understand the options market, if you want to understand option strategies, futures, great program. If you haven't test driven yet the Thinkorswim platform, so easy to do. Just come over to our website. You're actually right there listening right now. Hit the banner, bring it up. They'll allow you to trade with paper money, as you can follow Kevin and his team each and every trading day. Kevin Hinks, so you're back in Chicago. It's 23. I'm back here. It's like 47, and I got a scarf on. It's like, you're going to be kidding me, man.
Yeah, the problem with you being in 50-degree weather is that's like your polar vortex there. I left Florida yesterday morning, and it was in the mid-50s, going up into the low 60s, and people were bundled up like it was Armageddon.
It is. We're like little babies. I had a
Context is everything. Context is everything.
There's no doubt.
Exactly. So, yeah. Nope, I had a beautiful week in Florida. Really enjoyed myself. Glad to be back here in the ice cold of Chicago, ready to go. Because this market, you know, this is going to be an interesting week in the market, because I really think, this is my personal opinion, that Davos and everything that's going on in Davos has basically made that conference irrelevant.
Yeah.
Other than Trump's speech, what I thought was pretty significant, people don't want what does climate change, which is the focus of that conference, have to do with your daily trading today?
Well,
you know, and that's the whole focus of the news coming out of there, and traders don't care. I think so. People are moving on to what's really going on in this market, which is, you know, there are some things. I think this scare out of China was real.
Yeah,
I think that's causing some hesitation in the overall market, but I thought Trump's speech in Davos might have been the only thing worth listening to, and it was really positive.
Well, you know what's intriguing about Davos, that when you read what's going on there, folks, the hotel rooms are $10,000. I mean, that's just a whole different ballgame.
Sure.
It's like, you know, that is not the market. That's, you know, and when people tend to live in that world, well, that's their world, man. You know what I mean? We kind of comprehend.
But the day-to-day trader does not care what's going on in Davos right now, and these people talking about, well, the market might go up or it might go down. Well, thank you. Appreciate that.
Yeah. What we do know is that Netflix has their numbers this afternoon, folks, and if you go on the Thinkorswim platform, we got a 24-point expected move up or down. So that's going to be a nice little deal, man.
And we will be breaking that down heavy on today's show. So like Folio's going to cover it, we're going to trade it. We're going to look at all the reasons in what trade sets up the best for that number, and we're going to go over it, as well as United Airlines today.
Oh,
you know, the airlines are moving quite a bit. So, you know, Netflix obviously is the focus of today's show, as each show has that one stock that's the focus of the day. But United Airlines will be something that we'll have some fun with too. But Netflix obviously is going to take up a lion's share of today's show.
Yeah, that's a nice poster child, man. I mean, there's no doubt, you know. I mean, because we know that streaming is at the forefront now. There's no doubt.
Right.
You know, you saw the NFL numbers came out, folks, and they're a monster. So program, you know, network TV is not going away, at least for the NFL.
I was going to say Netflix, NFL. They're their own.
It's pretty amazing, actually.
And here's the idea about that. Because no matter how much you stream, no matter how many shows you can download, people still want live television.
Yes.
Yeah. There will always be the popularity of live television. And does Netflix have that? Not really.
No.
Right? No. So that is something that Netflix will have to, you know, when? I guess the big question is when. When does that shoe drop where one of them go? Remember when Fox went to the NFL?
Oh, yeah.
And the game changer that was, not only for them in terms of money that they paid, but what the exposure it gave that network.
You know, it's amazing.
When Fox blew up the NFL broadcast when they entered. So who's going to do that again? And that's really what looms on the horizon, I think.
Yeah. And it seemed to me when Fox did that, it's like, how are they going to pay for it? And it's like, that was such a score. It was like, and you know, now you correlate Fox with sports.
Sure.
You know what I mean?
Fox NFL Sunday.
Big time. Yep. It's a big deal, man. I mean, yeah.
And, you know, like NBC's Sunday Night Football was the highest rated show for how many seasons in a row now. So that's really the elephant on the horizon that these streaming networks, Apple TV, all these have to deal with. How do we get – I mean, think about when Fox sold all their networks. Guess what they didn't sell? News and sports.
Excuse me.
Totally, man. Yeah. You can see it, you know.
Yeah.
And
so very smart guys. They sold all the other things and kept what they thought were the two jewels.
Yeah, and it's proven them right.
They will.
That's
the only thing I can't wait to see is how the NFL is going to do it. Are they going to allow Netflix or Prime or Amazon to buy it? Because that's going to be, they're going to have to pay a huge premium because those companies still don't have the reach that the NFL wants. So that's really the small step that has to be made. But it's coming.
Yeah, it's pretty amazing.
Someone's gonna try and blow this thing up, right? And some streamer is gonna try and get this.
Yeah. Bezos is going to say, you know what, you don't want to sell to us just yet? How about I double what the rest of them are paying you or something like that, man?
Yeah.
Why not? You know?
Some crazy number that...
I agree, Kevin.
Think about it, Tom. What you just said. When Fox blew up the NFL, everyone was like, how are they ever going to make money on that?
Yeah.
And now it was a no-brainer.
Yeah.
Seriously. I know. I mean, you know, it's that dramatic. And guess what? What's so intriguing is that even when those numbers come in, I think about how many bars and everything else you go through. I mean, how do they even catch that many people? You know, that it's like, okay, you got one bar. Well, there's 500 people in there. There's 400 people. There's 300 people there. It's like one after the other after the other. And I think their programming, I mean, they got all those guys together. Their programming is good.
And that is the step, right, where you have to, the NFL has to say, wait a second, if we give our exclusive rights to Amazon and to Netflix, does every bar have the ability to stream Netflix in their TVs right now?
Yeah.
That's where it has to just catch up a little bit, I think.
And I was talking to a friend of mine this weekend in Florida, and when does Netflix come out and start limiting the amount of logins per account?
Yeah.
Just that. Think of the number of accounts that could add to Netflix.
Yeah. No, there's no doubt.
Yep.
Folks, right here, 45 minutes from now, outstanding program. We're going to be talking Netflix, United Airlines. Kevin, you have a great one, safe one. Stay warm. We look forward to the program in 45 minutes.
Great to be on with you guys.
Thanks so much,
Good
Kevin.
to have you back. Stay right there, folks. Tommy and I are coming right back. We have the Dow down 67, NASDAQ off 12, S&P's up 4.5. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrial's down 79. You get the Nasdaq off 17. S&Ps are off 5. Let's go into the NDX just for a second. NQ. I want to look at the NQ. What do you see the spread in the NQ this morning? It's a nice little spread.
Oh,
There's
man.
no two. I mean, look at this thing. So what? We got a low out here of 91.14. You're at 91.65. We just popped up to 91.82. Inside the NDX 100, and what you had on Friday, by the way, folks, is that when you hit these highs, we had volume on Friday, so it's like I wanted to get tested. Tesla.
What's the leader out there?
Look at this, man. Tesla's up.
I haven't heard of this stock. Tell me about this Tesla stock.
Serious.
Man.
Up 5.9% or $29. Big number, $540.
Yes.
Costco's up 2.1%.
Okay.
Look at Intel. Intel's up 1.8.
They got an upgrade. I think they have earnings coming out later, maybe, but they're gonna, they got an upgrade today.
And then you got Autodesk up 1.4. Now this one's getting smoked. That's Trip.com. That's down 10.8%. Let's look at this. That was on the move last week. So let's see what they. Well, we'll find out. It was on the move like for 4 months. You got to be kidding me if it's only a downgrade. That it whacked that stock that much? Looks it, huh?
Coronavirus impact. Okay, there we go. So they're going to be dealing with Asia.
Yeah, that's pretty heavy. Pretty wild that they could. So online service provider Trip plunged the most in 14 months after Bernstein analysts downgraded the stock, citing expectations for near-term negative impact from the coronavirus.
Coronavirus. Yeah, so it looks like analysts noted the 2003 SARS outbreak resulted in double-digit growth impact to hotels, especially high-end hotels, which I think that hits Trip.com. Bernstein cuts first quarter, second quarter revenue by 8% to reflect it so far, and downgraded the market perform. Yeah, this coronavirus, man, pretty intense.
No, it's serious.
Let's pull up that story right now because we're going to get into it anyway. There we go, China virus. It's always eerily makes me think of some of those movies like Outbreak or something where you hear those first reports of coming over the radio, right? You know, you hear So China's mysterious respiratory virus, 6 deaths now, infected a number of medical workers, and a sign the outbreak entered a new phase with the illness spreading person to person. Healthcare workers contracting the new illness indicates it's more easily transmitted than previously thought. That's an eerie one for sure, bringing the outbreak to a higher risk level, reminiscent of the severe acute respiratory syndrome, SARS. Pandemic killed almost 800 people in Asia 17 years ago. China on Tuesday raised the number of cases to 291. I had heard almost 300. Maybe that's what we're talking about. You have 6 deaths now, and you have the lunar holiday going on in China.
Which is so serious.
So huge travel holiday. Hundreds of millions of Chinese prepare to travel across the country. Hundreds of millions. That would be like every single person in America, just to put it in context, traveling.
That's right.
Every single person in America traveling. It'd be hundreds of millions prepared to travel across the country for and globally for the Lunar New Year holiday. That's got to be concerning when you have an airborne illness infecting hundreds of people. So you have airports all over the world now, right, starting to check temperatures, anything. So the risk from the virus causing pandemonium has increased because spreading from different countries. We're now seeing that can be more easily transmitted. Both viruses, as in this and SARS, belong to the coronavirus family. It's a similar one. So in comparison with SARS, the one good factor, the momentum seems to be a low mortality rate, as in 300 infected, 6 people. I don't like that mortality rate. What's that, 2% at least?
It's still not good.
No, definitely not.
And what happens, folks, is that now they have these. They're called wet markets. I mean, they're all over Asia, basically. And what a wet market is that you have animals. They're killing animals. They're selling it right there without refrigeration.
Okay.
And I've seen them.
Yes.
And it's a big deal. Do you know what I mean? Because people want them fresh, and that's. But at the same point,
the word "fresh" when you're talking about that
is intense. Exactly, because
it's debatable. I would say.
I agree, man. Because you don't have refrigeration.
Exactly.
You know, they have refrigeration, but not like we're used to. Let's put it that way. Because they'll have these long things and they throw them in, but most of the stuff is hanging down, and it turns into a problem. And China's been trying to clean these things up but people like them. That's the bottom line. It's a supply and demand deal. And that's where these things come out of. That's where they normally first start. You know? But
can we go into the Asia markets? Maybe just pull up because it was a big
hit. Yes.
Especially you had Hong Kong down 2.8. They got a downgrade from Moody's on top of this.
Is that what I heard? The news
did
on your show when you were talking.
So they got a downgrade from one credit rating to the next. That having to do just not with the coronavirus, just the straight out Hong Kong GDP revisions of what they're dealing with.
Look at those numbers. Every sector.
Yeah.
That's, overall we're down 2.8%, but you can see utilities are off 1.4, information technology is 2.3. I mean, just.
And to put things in context, you have the HSI trading about 28,000. That's right where almost our Dow is, down 810. So imagine if you had the Dow down almost 1,000 points, right? That's what you're talking about.
And that's a gap down. Let's pull this back. Yeah, this. I mean, geez, look at this. What we're looking at here, folks, okay, I get this back to 2007. The highs were 31, almost 32,000. And 2018, the highs were 33,000. But this is a classic, like, okay, hold it, you get 3 lower highs. Now you get 2 higher lows, but it hadn't been able to make it through that downdraft of, what's that, May of 2019.
Okay.
What is that number there? 28.5.
Okay, that's April of 15.
Okay, so it's not inside the lower range yet. 28,588.
Yeah, no, it is. It's a 27 and change.
Oh yeah, it's 27. Yeah. So now they're in the lower range.
Yeah.
And it hit all of Asia basically.
Yes, that's what. Yeah.
Some parts not a lot. I mean.
Oh no, I mean Nikkei down almost a full percent. Shanghai.
Yeah, big
1.4. Shenzhen 1.2.
So let's go take a look at some of the higher volume equities in this marketplace. We'll see whether we get volume. As I said,
I think we're in China.
How about that? That's pretty good. We're in China.
Yeah.
That's right. It's
there we go. Why not?
Let's go back to the U.S.
I guess so.
So inside the U.S., Morgan Stanley.
Chip stocks at the top.
So you get Advanced Micro up 60 cents, Intel up 95.
Yep.
Morgan Stanley's down $1.84. That's after all-time highs.
Okay.
Apple's down $1.49. Facebook $2. No big deal there. Nothing heavy, man.
Yeah.
Inside the, we did the NDX, right? So inside the Dow Industrials, we just started talking about Boeing. Well, I want to see what Boeing is. Yeah, let me see this thing. Because Boeing is teetering on breaking that consolidation.
Yes.
I think it's 322, the consolidation.
Yeah, tough day on Friday.
Yeah, look at that, 320. Look at this. That's so Boeing, folks. Okay, you came down with 11 million. You're going into 13.5. Now, it's not more, but when you stop pressing lows with volume, that's the building cause.
Sure.
You know what I mean? So today's going to be a big day, you know, because if you get like this, looks like it's going to hold on price. But if that's what you get, that's actually, and the volume lightens up, that's the building cause to go lower. That's like, okay, I'm getting some energy because it looks to me like 292 is going to be game, but
yeah, it could be.
It
That's
could
only
be
10%. It's
right.
only,
That's nothing.
I mean,
No, I compared
not for
to
what they're dealing
has
with,
happened. Right.
And they have earnings, I believe, here a week from tomorrow. Oof. So they're going to have quite a conference call for that new CEO. Yes, a week from tomorrow before the market. They're going to have a lot to answer for, I imagine, on that conference call, especially.
No doubt.
Yeah.
877-927-6648. We have the Dow down 96, Nasdaq off 20, S&P's off 6. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates to my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 77, Nasdaq's off 16, S&Ps are off 4, and that S&P is clawing on its way back, man.
Yeah, now it's just hanging at about 4 points in the negative, but I think we're down to 3307 was the low in the S&P when we started that. to pull it over. We're trading like 33.21 right now, so 33.07, 14, 15 points from where we were. But Netflix, after the bell, digging into their numbers and what they're looking for not bad, $5.5 billion in revenue. I believe I heard the number, we'll have to get into it, 7 million subscribers. That's always a big one, what they're looking to add. And profitability-wise,
53 cents.
53 cents, the bottom line. But always interesting, the conference call in terms of what they talk about, right? What's going to be future spending? They might talk about, I'm sure they're going to highlight their Oscars. They got 2 nods for Best Picture.
Okay.
But then you have Disney Plus coming online as they're ramping up. I'm sure you may have analysts with questions about that. You had NBC Peacock talking about some details with their streaming service on Friday for the first time. So they have a few things to answer for in terms of maybe competition, but it'll be about subscriber growth, I imagine. And the Netflix train marches on, man.
It does. I mean, you take a look. I mean, this growth is phenomenal. I mean, 2016, they took in $2.5 billion. They're going to $5.5 billion, man. I mean, that
for the quarter you're talking about. Yeah.
That's a big number, man.
Oh, it is. It is. I mean, even you look at from 2018, just no matter which one you go back, right? 2017, 11.7. They're almost going to double revenue from 17 to 19. And they're almost going to double it again from 18 to 21 in terms of 15 to 29. And they're doing that profitably at a time when they're spending $17 billion a year on revenue. It's $20 billion a year on revenue as you go out.
It's huge.
It is, man.
It's huge money. There's no doubt about it. That's pretty amazing, man.
Yeah. And you see with, why they can ramp up those revenue numbers, because basically their entire cost is revenue.
Yes.
I mean, you have, is production costs.
Production, right.
So you're spending $18 billion on production, but guess what, man? We're taking in $20 billion, and we're going to take in almost 25, and we're going to take in $30 billion in 2021. Yeah.
Not bad.
Yeah.
Let's go to Victor in Paramus, New Jersey. Hey, Victor, what's going on?
Not much. FCX earnings come out tomorrow, and then look at the symbol X. Where do you think that's going? But FCX earnings come out tomorrow, and it's taking a little beating.
Yeah, so this is going to be interesting. The Freeport McMoran's been on a tear.
And I see it on there, Victor. The Bloomberg is saying maybe Thursday pre-market for Freeport.
Oh, so tomorrow morning the earnings come out.
All right, well.
No.
Maybe you're right. Yeah.
Well,
I don't know, whatever.
Yeah,
just for what it's worth.
Yeah, this is telling us Thursday, right? Yeah. So you have, let's see. So it's going to be interesting. This is a complex ABC up. It took out the B point.
Dividend.
Yeah, it's like a 15 something. Let's see. You got 1338, 1070. So about $3, which is
$2.50.
Yeah. So it's $15, right?
Yeah.
So it's a complex ABC structure up. I mean, it got hit out here today, but it looks like it's going to reject lower price at this 1232. It's been on a good tear, man. I mean, my take is that it doesn't want to go up to this $15 level. And we'll see, that swing point is kind of hanging out there. At both times that it went higher, you can see that expansion of volume. So that's still saying it wants higher price. You go over to the U.S. Steel, that's in trouble. It's always been in trouble.
Yeah, is that like going to turn into Bethlehem Steel and just go bankrupt and go bye-bye, or what do you think?
It seems that they've been losing money forever. I mean, let me just see if they're still losing money.
Excuse me.
It blows my mind that they're still in business, but...
So they got earnings a week out from tomorrow.
Yeah, and they're still losing money. So, they're losing money 2019, 2020, 2021, right? Yeah. But we need a steel company, so they can't let them all go out of business. That's the other side of this. That's,
Yeah.
That's,
True.
So, I wouldn't be buying it, that's for sure. I mean, this thing looks to me that, I get $6 on the agenda again. What is that right there? $8.52 first. But you can see that this has been in trouble for a long period of time. And that's regardless of the tariffs that got put in. Basically...
they were supposed to get some help.
Yeah, the administration basically did everything to keep the steel companies alive, and it didn't work, because it is what it is. You know what I mean?
Because I think Alcoa came out with some crappy earnings, too. Yeah, so makes sense.
Which company?
No, Alcoa came out with some bad earnings.
Alcoa, okay.
Alcoa.
Yeah.
Yeah, that's been a dog forever. What happens with Alcoa is that even with the energy costs coming down, it takes so much energy to make aluminum, man, that they just never had seemed to be able to really get to higher price, you know, because they're in a business that's very expensive.
Where do you think IBM is going after the close?
IBM, oh my God, you like all these old dogs. Let's see.
No, they pay dividends. I don't know. There's supposedly this new technology coming out with quantum computing and everything.
Yeah, I know. We've seen the NFL. They were the main sponsor this weekend. Yeah. I wouldn't be buying. I mean, this is already telling me it's rejecting higher price out here this morning. Come into the gap.
Right.
Couldn't hold price.
Go to 126. There's a gap at 126.
130. Yeah, you get a 128's high volume. Let me put this on a weekly for a second. Weekly.
Then it'll close the gap. If the gap's down tomorrow, then maybe it's a buy.
Yeah. I can see that. You know, that's a big consolidation. I mean, you know, IBM's not going away. That's for sure. But I don't think They certainly, 127's game. They haven't got the traction, and we know that, you know, what they should have done is this cloud computing should have been growing like crazy, and it's not. And that's a big problem.
That's right. They bought Red Hat, too. That's right.
Yep.
Yeah, you know, and that's, you know, they were in there early enough, but they just didn't perform like Google performed and like Microsoft and Amazon, you know?
Look at the revenue, man. They're stagnant from 2016 to 2021.
Yeah.
Which is crazy in the business there.
Isn't it?
Yeah.
And if you take that, and then this number keeps going down, the number of employees, and that's how they keep at least the
profitability costs.
Yeah, somewhat. So.
Yeah.
So.
Thank God for share buybacks, right?
Right.
That's right.
No, saved a lot of companies. Exactly.
That's how they've been doing it. There's no doubt, man. Cooking, brother.
Thanks, Victor.
Have a great one, man. Have a safe one. And what you have there by Freeport-McMoRan also, folks, is that HGH0. So Freeport-McMoRan is one of the biggest copper, gold companies in the world. This copper contract, we can see this morning, this is interesting. It's down 4 pennies, but to me,
$4.
yeah, this
4 pennies. I see what you
this thing HG1. Let me just see this. Copper to me looks like it wants to try to run to like $3 level. Well, this is China this morning, no doubt about that, because it's all about China and the copper market. Yeah, what's that right there? That's 298.
Yeah.
You know,
Yep.
That's your next leg. And
Okay.
if that's what we get, you know, we'll see us. You know, the coronavirus is serious. There's no two ways about that. The real question is going to be like, because it stops everyone in a second. Stop me in a second, that's for sure.
Totally.
You know, you're going through those airports, and we know airports in general have problems.
That's right.
Dow Industrials right now down 67. NASDAQ is off 8. S&P's down 2.5. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials off 71, Nasdaq down 11, S&P's off 3. If we go over to a couple of the gold equities here, an Eagle, this is so intriguing. You know, it's not gold is down. It's not that the gold equities are moving. You know, but we were talking about this last week because when I was live on the air, that was an anomaly.
Yes.
What was happening on the 14th? You're at $57.47. They come in, buy and hand over fist, and all of a sudden we're at $62 4 days later. Pretty amazing. I mean, it's amazing what's going on here today because it's not that the volume is explosive today, but it looks like there's not a lot for sale, meaning that you're up so much, folks, okay? The bid keeps going up, the offer keeps going up. So
that's
it's
what
like,
happens, right? You got no sellers, people want to buy.
Exactly.
Going. Yeah.
But that's pretty impressive, isn't it?
Yeah, 3-point-something% probably.
You know, when... You know, gold, well, as I'm talking, actually, gold's making a run back, a comeback here.
Yep, we were down almost $8 now. Excuse me, down. I mean, look at that low, actually, $15.46. We're $10 off the low.
Yeah, and you get volume behind this move. You know, that's 370,000 contracts. That's good contract volume, and it doesn't look like it wants to stop. Let's go over to the dollar for a second, because the dollar did a heck of a counter-trend bounce last week. Yeah, it's still up there, man.
Yeah.
I mean, came back up to the top of the range again, and... It's the yen. Now, it's surprising that gold's not really smoked here because, oh, look, it's coming back inside again. Okay, so I believe it's, let's see. So the benchmark on the yen that it got over last week, 109.73. Look at right there. We're at 109.92. No, we were talking with Teddy, too.
Oh, yes.
You know, and that, I mean, that was a good week last week for the yen. You know? And it's like, okay, if you're going to fail, that'd be pretty cool for the gold market. I need another 20, 30 ticks in order for that to fail.
Yeah.
You know, because if you didn't, then you're at 112.
Okay.
And 112 would not be great for the gold market.
No.
Not good at all. This market, though.
NASDAQ 100 in the positive. S&P's only by 3. Yeah, and the negative.
Yeah. There's no doubt they got action on here. Well, let's go take a look at these bonds, because this is just cool.
Yeah. Maybe we can take a look at the yield after we do this, because, some action, man, for sure.
There's action. You're getting over the swing point. You already got 1 million contracts. That's good contract volume. We know that, you know, that day that was an anomaly, that January 8th, that's when you had big reverses in the bond market, the gold market, the S&P, all of the above. But the bond market, the gold market, the currency market had given it up on price. And that wants to be tested. That's 130.06. And the yield at the 10, 1.771. Still not bad, huh?
No.
Look at the, let's just, so 3 months. 6 months. What's
Call it right in the middle of the range.
Yeah, right in the
From
middle.
Almost just shy of 1.5 to above 2. But you back it up a year, we're at 2.78, almost 2.8%. Yeah. And you back it up a year and a half, I think we're at like 3.3.
Yeah, right.
Yeah.
Right. TLT, so look at the 20-year plus, because if you don't have the futures, you can see that you're at the top of the range again. You know?
Oh, yeah. I mean, the 30 are up a full point.
Yeah. That's, what, 139.71. You're at 139.46. Doesn't look like we're going to have the volume, but we'll see how this hangs in price. But that's a big number.
Yeah.
Because the bottom line is that that's 20-plus ETFs. That means that there has to be 20 years left before the expiration.
Yeah, so they have a few different, more than a few probably, bonds.
Yes.
All of them.
Right.
Maturities 20-plus years beyond.
Right.
Yeah. Between 20 and 30.
Yeah. Oh, the oil market, McDermott finally went bankrupt. So let me see if we can find this for McDermott. This is pretty amazing, and this might be.
Go over? No.
There it is, right there.
Yeah.
Yeah, Plunges company said.
There we go.
Plunges. I don't know. The stock plunges 29%. Yeah.
Before it was halted.
Right, and if you see this is like.
No, we didn't. You're
Nope.
still. Yeah.
Okay, so 1 second.
No, you can. Okay.
We just go back one. Yeah, I think so. Right.
Okay.
Back one. Back two.
No, we're gone now. We got it.
Okay.
Yep. You trying to find the symbol? Just start.
Yeah. Oh, McDermott.
Yeah.
MCD.
I think it's MAC.
There we go.
There we go.
I think that's
Yep, you got it. MDR. Okay.
Okay, so it was halted anyway. The previous was 70 cents. But when you see this, the thing, now, I understand it now, but I didn't understand it right at the very beginning, meaning, the stock goes from $103 in 2008, but hasn't recovered. And what you have is that, remember we were talking about this a couple weeks ago, at oil at these levels, folks, it would seem that if you can't make money at oil at these levels, I mean, that's pretty bad, right?
Yes.
But what had happened is that these companies took out way too much debt.
Okay.
And they just don't have the way of paying it back now. I mean, it's you have no cash, you took out too much debt, guess what?
Yeah.
You don't have $100 oil.
It looks like they have the support of more than 2/3 of all its funded debt creditors for restructuring. They're probably thinking that's the only plan they're going to get any money back from, right?
Yes.
In terms of eliminating over $4.6 billion as they come out of that. So the restructuring transactions will be implemented through a prepackaged Chapter 11 process, financed by a debtor-in-possession financing facility. $2.8 billion they're going to come out of that with. Also secured committed exit financing of over $2.4 billion in a letter of credit facility capacity, and will emerge with about $500 million in funded debt. Expects to hold an auction in approximately 45 days to solicit higher or better bids for their technology business. So, yep. Been a slow path to zero for that company.
Slow bleed,
Yes.
yeah, no doubt. I'm going to pull up a couple others. Yeah, it doesn't look like I don't notice any of these.
Yeah.
But the oil patch, that's going to be the first of a few more coming down the line here.
It's a tough deal. Yeah.
It is. It's $58, man. That's big money.
Yeah.
There's no doubt.
I'm going to jump around a bit. Mr. Larry Pesavento on the front page of TFNN.
Oh, good.
So a week from tomorrow, man, time flies. January 29th, he'll be in there with subscribers to Fibonacci 24/7, 90-minute webinar right after your program at 4 o'clock. Larry will be in there till 5:30. He's going to be talking about a variety of topics, man. I look forward to it myself. Whether it's why 3 out of 10 is a passing grade. We all know, man, you don't even have to bat 500 if you have your risk-reward incorrect. Simple math behind all market moves. A hidden in plain sight trend change pattern that gives you early entry into the trend. How to find and update key harmonic numbers to trade against in futures, forex, and stocks. How to translate 3 go-to patterns into supply and demand, and how to use them for entry. The continued importance of the opening price in 2020. Pretty remarkable, that's this year.
Yeah.
How to use Fibonacci numbers to indicate a continuation move, and how to use the time of day when taking a position and for entry into longer
That's
trends.
quite a bit.
It is. 90 minutes.
Oh, it's 90 minutes. Okay,
It
cool.
is.
Right. Okay.
So he'll be in there. That will be archived for subscribers. 30-day money-back guarantee for new subscribers, whether you're in a monthly, 6-month, or a year. You can save 22% or 32% And Larry just put out an update this morning that had gold video, S&P video, and then every weekend he has a big report. So that came out, I believe, yesterday morning. So great time to sign up, and you'll get access to that a week from tomorrow.
Nice.
Yeah.
Dow Industrials right now down 94, Nasdaq's up 15, S&Ps are up 4.5. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 99, Nasdaq's up 18, S&Ps are up 4.5. We have the Super Bowl in 2 weeks. We were talking with Kevin Hinks. We were talking about basically Davos and folks in a whole different world. Well, at the Super Bowl, folks are going to be in a whole different world in Miami, too, right?
I guess so, man. So we got San Francisco and Kansas City, right?
Yeah.
It looks like all those big tech financiers might be coming from San Fran, but pretty cool article, yeah. So what's going on here?
So what it is that in Miami, folks, okay, you got you have short-term rentals, and you have people that manage these short-term rentals, and the bottom line is that you get a 1-bedroom right now in South Beach going for $5,500 a night. You get a 4-bedroom penthouse that they're trying to get in the luxury hotel at $40,000 a night. So I can't wait till after this is over to see exactly close.
4-night minimums and 20 units. Here's a tip: if you're going to spend $160,000 on 4 nights, you should look at the cost of actually buying that entire unit.
There's no doubt.
I'm serious, right?
As you move down a little, where do you see this? Because I know basically in Hollywood, Florida, right? This is just cracking me up, okay? Because Hollywood's close to Miami, okay? But it's still 35 minutes away. The bottom line is that you get the Ramada Inn at $692. The Days Inn at Fort Lauderdale Airport is at $399 without tax.
Yeah, I don't think that those are 5-star hotels, right?
No.
Yeah,
no,
exactly.
No, they're clean hotels, but they're not.
The W in South Beach, which probably is $37.98, so $4,000 a night.
Yeah.
Triple the asking rate for the weekend after the game.
Look at this. You got party goers with bigger budgets can look to short-term rentals. Let's see. Compass Agent in Fort Lauderdale marking a 7-bedroom waterfront at $8,000 a night. My God.
Hey, 7 bedrooms, man. You actually have 7 couples or something like that going out here on the waterfront. That's about $1,000 a night to be on the Super Bowl. Super Bowl ain't cheap, man. We all know that.
No doubt. Stay right there, folks. We got Think or Swim coming up next. And Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, Bill.
Thanks, man.
Go get him, folks.